Hi, everybody. Welcome, welcome. We'll start in a couple of minutes, about 2 minutes, and we just want to say thank you to the North San Diego County Realtor Association for bringing this class to you today. So much thanks to them for many years of support, by the way, not just today. So thank you. And we'll start in just a couple minutes, y'all. So hang tight, get your coffee ready, whatever else you're going to need to make it through the presentation today. I drink coffee for myself to make it through the presentation. All right, we see everybody coming on in now, so we'll hang tight. Let's start at 10:02, everybody. So if you're here, we're starting at 10:02. Welcome. Almost there. Thanks for joining today. Another minute or so. All right, hopefully you all can see the presentation. And Crystal, why don't you go ahead and just give a little start here, and we'll get started when you're done.
Okay, yeah, so just wanted to give everyone just a little housekeeping. We are, of course, in our class today answering questions. So if you have any questions at all, you can just put it in the chat. And everyone should have also received a copy of the PowerPoint. So if you didn't receive a copy, feel free to put in your email in the chat as well, and we'll send that to you right now. And that way you have the PowerPoint during the presentation. All right, let's go ahead and get started.
All right, everybody. So welcome to Staying Live 2025. If you've been to our classes in the past, like Rev Up Your Sales and Reverse, etc., we talked quite a bit about the reverse mortgage over the last about 10 or 11 years with you all. But today I want to get into a little more about the clientele that we serve and you also serve, which is our retired and older homeowners. And we want to kind of give you an idea of what we see when we're visiting with them, how they're handling the things that are happening in the market today, ultimately how you might get some business, and what kind of reverse mortgage guy would I be if I didn't spend a few minutes reviewing the reverse mortgage as well. So that's what's on our agenda. Feel free to ask questions throughout the class. Right now we have a little bit smaller class, so I might just knock off questions during the class. But if I don't get to your question, it's not that I don't see it. It's just that maybe I'm going to answer it throughout the material. So away we go. All right, so let's talk about issues facing older homeowners today. How these, I guess you could say high interest rates. I mean, are they really high comparatively over the last, 20 years, 30 years of interest rates? Maybe not. But higher rates than we're used to are giving us troubles. And maybe how this can help you all out there in business. So that's what we're doing. Here we go. So in case you didn't know, obviously we are in the reverse mortgage industry, which really means we're in the older homeowner industry. And I've been doing reverse mortgages for about 18 years and learned quite a bit about the needs and the things and the problems facing our older homeowners today. And usually when I get called out or someone calls into our office, it's because they need cash. They need money. And either they or their family members are calling going, hey, my parents don't really want to sell this home. Can you figure out a way to get some cash out of the equity for them so that way they can afford to keep the house up? They can afford to, do things that they need to do in retirement. And so is it even possible with the way interest rates are today for older homeowners to be able to refinance? And if they can't refinance, are they going to sell their home? And if they're going to sell their home or they're going to refinance, whoever may be, how do we know that they need our services? How do we find people that need our services? And so that's what we want to talk about today. So when I go out to see an older homeowner, and I'm usually out 2 or 3 times a week minimum to see a retired or older homeowner, and almost all the time I can find one of these things going on with them. And these are things that may cause them to need to get cash or sell a home. So these are the signs I see. The reason I label them external and internal, external means that I could find these people here without knowing them, without getting referral to them. Just if I wanted to get up this morning, open up my computer and say, I'm going to go try to find a listing or a loan today, I can find these things without anything other than my computer. So I call those external because we can find these people. And so I see lots of peeling paint, leaky roofs, yards aren't being kept up, older cars in the driveway, etc. And then we start to get into a little bit more of our research, which I can find people that have tax lates. I can find them that are in divorce. I can find them that are in default. And so I see these things when I go out there. And this is usually a clue that something is going on financially. And so we'll give you logins to some software so you can find these things as well. And that way, if you wanted to just cold go out and try to find someone that could use your help, you can do that. Let's talk about things that we can't necessarily find on our own. And maybe I should asterisk that. And here's why I say that. Homeowners insurance increases and even auto increases, but homeowners insurance increases most definitely. If you're a homeowner in Southern California, you probably have gotten a raise in terms of your premiums, because I believe the commissioner allowed insurance companies to raise premiums like 22 or 23%, somewhere in that neighborhood, which, could be a $300, $400, $500 increase to your insurance policy. And that's, believe it or not, creating some issues for our older homeowners who are on a fixed income. So a lot of times when I'm going out to these homes, I'm finding people that are like, Ryan, my insurance went up and it's expensive. Or, and you all know this, for people that are in a little bit of that fire area, they're on a fair plan, right? Their insurance companies are not renewing them. They're forcing them on a fair plan. And we know those premiums are add $2,000 or $3,000 a year to a client's homeowner's insurance bill. So that's a lot to swallow. And I get plenty of people calling me out because they're like, I can't afford my insurance anymore. Health changes, obviously, I think that's a given. As we get older, we're having issues taking care of our bills, our houses, etc. Not everybody, but I see that. Mounting debt, let's talk about that. Inflation bit everybody, right? We know that, no secrets there. Some people just started spending less. Some people went out and started working more. Hey, if you're a retired homeowner and you're already spending as little as you can, and you're not going to go out and just work more, what happened to that inflation? Where did it go to? Did Social Security increases cure that problem? No. Credit card. I see more credit card debt now than I have in years and years and years. And a matter of fact, I think we're at kind of highs, if not all-time highs, for our older homeowners with their credit card debt. So they're absorbing inflation with their credit cards. They're keeping their houses fixed up with their credit cards. This is an issue because we know you can only kick that rock down or can down the road so much before you got to face the music. And so nowadays when I'm going out, I'm seeing high credit card debt, $20,000, $30,000, and I'm seeing them usually 1 or 2 payments away from becoming late on that credit card debt. So this is another issue that is forcing older homeowners to do something. How about those hero and pace loans that are out there? Yeah, those are causing problems. And if you all aren't quite aware of what those things are, let me tell you. When you need to do work on your house, Mr. D, yes, you will get a copy of these slides. If you have not already, they're usually in your inbox. So I'll get that question over to Crystal to help you out with that. Okay, let's go back to these hero and pace loans. So we all know how expensive it got to be to maintain houses, especially during COVID. Inflation started coming. Man, what? A piece of plywood was like $40. Right. So if we want to keep our houses in good condition, or even fix them up a little bit, fix those leaky roofs, etc., peeling paint, whatever we need to do. And then you got a knock at the door of someone saying, hey, look, you don't have to worry about qualifying for a loan. We're just going to have these fixes included in your property taxes. So that may be a good idea for some homeowners. For a lot of our older homeowners, it was a bad idea because, number one, the lenders were a little looser on their underwriting guidelines because they knew those payments were going to be included inside their tax bill. And so they didn't have to worry about getting repaid because it was part of your taxes now. So that was an issue. Here's the other issue. They were borrowing too much. And so what happens is I'm going out on a ton of calls. I'm having to get people loans. The people that I can't get loans are having troubles. Why? Because they see their property tax bill go up, not just $1,000 a year, $5,000, $10,000, $15,000 a year. That's 4, 5, 6, $1,000 a month extra, you have to save to pay that. And then they run into the fact they're like, oh my gosh, I can't afford my property taxes and I get in default, which goes back over to the default side on the external awareness. But the hero and pace loans, definitely I see them causing a lot of problems for our retired homeowners. They shouldn't have done them. But then again, what are they going to do? Keep a leaky roof? So these are signs that are out there that lead me to know somebody might need to do something with their home, get money, sell their home. Something is going to happen here because we just can't let these issues continue to go on. Well, some people can, and you've seen those homes, right? Do we really want to get that way? Do they want it to get that way? No. So we need to try to get to them earlier, and these are the signs we can look for. So when I'm out there, you got to ask the question, is it possible to refinance today? Rates are higher, right? The traditional refinance market is all but gone right now because everyone's sitting on these 2% and 3% interest rates. Yeah, maybe if you bought a home in the last couple of years and rates dip 0.5% or something, but that even it really isn't a big thing today. So when I'm out there and I'm seeing our retired homeowners, and they're like, hey, Ryan, what's it look like to refinance my loan? I was like, it doesn't look like anything for you. You have a low payment right now. You'd have to double or triple your interest rate. Your payment would double at least. And they can't afford to have that happen. I used to do more regular loans for older homeowners about 4 years ago, and rates are super low. I haven't done one in like 3 years because the rates are too high. So that pretty much throws that out the window. Trying to refinance at the regular loan when you're a retired homeowner, pretty tough. So they might say, okay, Ryan, how about that reverse mortgage? That should solve the problem. You don't have to make a payment on that. So what do I even care if interest rates are higher on it? I'm getting a reverse mortgage. Well, here's why. When interest rates go up on reverse mortgages or just in the market in general, our loan amounts drop. So they drop substantially, which means that I might not be able to get you enough money on a reverse mortgage to help you. So that's another issue that we're coming across when people are like, Ryan, I need money. Let me just do that reverse mortgage I never wanted. I'm like, not only did you never want it, but you're not going to get it because maybe I can't get you enough money. We'll talk more about that in a second. So yeah, even on my reverse mortgage, maybe only 35 to 40% of people can get a reverse mortgage right now. So what does that lead us to? It's a hard time to get cash out of homes. And so will a retired homeowner sell a home if they can't get money out to fix the house up, supplement their Social Security, etc.? And yes, of course they will. Most people aren't just going to bury their head in the sand and say, well, I can't get any money in this house. I'm just going to watch this house wither away into nothing. I'm barely going to take care of things. No, right? We're smarter than that, even when we're older. Jeez. So the average age of a home seller right now, 63 years old. That's right. More older homeowners selling their homes than any other part of our demographics, right? And if we even look to a year ago, 23, it was 60 years old. And I believe back in 2022, when I looked at the study, it was 58 years old. So what is happening is we are figuring out we need to sell these homes. We need to do something. Now, sure, some people have passed away and you'll see those homes go on the market. But there's a lot of older homeowners that are just selling because they need to get to cash. They need to downsize. They need to do something. It's the biggest demographic of home sellers we have right now is our 63, or at least our older homeowners. And by the way, they're also one of the biggest demographic of people purchasing homes. I think that like 56 or 57 years old is one of the largest home buyers. Why? Because they can sell the home and have enough cash to buy their next home. So if we're working with older homeowners, we should be busy right now, right? Okay. So what about the people like, Ryan, I really don't want to sell. Why can't the reverse mortgage work? And I say, well, it can work, but you have to have the right amount of equity. Because remember, if I'm lending less money to pay off your current loan, that means you have to owe less or have, a more value in your home. So we're just not lending as many or as much money on the reverses. So I have this conversation all the time right now with homeowners. Look, today's financing, where we're at with rates today, just not going to get you what you need for a loan. So you probably should think about moving. And of course, I'm met with, I don't want to do that. I won't do that, etc. And I say, well, I appreciate that. I want to believe you, but I know the average age of a home seller is 63. So maybe you're kind of feeling that right now because you're a little surprised at the situation. But a lot of times you'll end up being like, okay, I guess I need to do this. Just not right away. But eventually, sometimes you do. Because, by the way, people will be like, Ryan, I'm just going to wait for rates to go down. I was like, are they ever going to go down? Really? If they do, maybe they go down to 0.5% or 1%. That's still not going to help. Not going to help. We look at the average rate over, I don't know, the last, 30 years or something like that. Rates aren't even high by those standards. Rates are probably average right now. So when people ask, Ryan, I'll just wait for rates to go down to refinance, get cash out, or try to get an equity line or get your reverse mortgage, I tell them, you might be waiting for something that just shouldn't be. Like maybe we shouldn't be back at 3% interest rates. So I try to be frank with people and say, I don't know that rates are going to come down enough to help you. So let's talk about selling. But the next thing they worry about is, Ryan, if I can't get a loan to refinance this house and I got to sell and just use cash to buy the next house, I don't like that idea because I'm going to have to move somewhere. Maybe I don't want to move to. I'm going to have to do something that I am afraid of. So the next thing we have to do is be able to get them a loan or find them a replacement property that they're going to say, oh, well, yeah, I guess I could let me start thinking about that. And that doesn't happen right away. It's not like we show them ways to do it and they say, oh, that's great. Let's go ahead and do this now. It takes a little bit of time because what happens is they got to go back to their current situation and realize there's not a lot of great answers there to start thinking about the stuff that we put in front of them to help them say, okay, I'm going to sell. I can use whatever kind of reverse mortgage purchase loan Ryan has. My realtor can find me a property. And they start saying, I might need to do this. So let's talk about me and my poor loans, my poor reverse mortgages over the last 3 years. What happened? Well, this happened. Interest rates went up. Now, this slide, granted, it doesn't take into account maybe properties values having gone up. This is strictly to show you how much interest rates reduce loan amounts in the reverse mortgage industry. Now, an increasing property value will help get some of this loan amount back, but not near as it doesn't help considering how much we lose because of higher interest rates in our industry. So let's say we have a 75-year-old. I got to know age because we lend money based on age in our world. Got to know value. So if I had a 950 value, age 75-year-old back in 2021, I have charts. We have all these charts the government gives us. And they say, Ryan, first thing you want to do is find the chart with the current interest rates. Okay, I'll find the charts at 6.5%. Next thing on that chart, Ryan, find the age. Okay, 75 years old. So now I have a chart that shows age and rates, and then it will tell you how much I can lend based on percentage. So in this case, back in 2021, where rates were maybe about 2.75%, something like that, I could lend somebody about 58% of the value of their home. Well, in this case, that would be $559,000. I could pay off whatever loan they had on their property as long as it was less than $559,000. In this case, a client owes $425,000. Pay that off. So I've paid off their old loan. They have $134,000 cash left. They can do with what they want. So that worked. People back then were like, yeah, heck yeah, I'll take that. Fast forward. I go to the 6.5% chart where maybe I said it wrong. In the old chart, the old example, I'd go to the 2.75%. Sorry, I mixed that up. Back in 2021, I'd go to the chart that was at like 2.75% to figure out the LTV. So now we take today's chart, 6.5%. 6.5% for a 75-year-old says I can lend them about 42% of the value of your home. Maybe actually a little more than that right now, maybe about 44%. But anyways, that's about a loan amount of $420,000. Well, guess what? $140,000 of loan amount gone because I got to use a different higher interest rate chart. So that means I can't get them nearly as much. And if they can't pay off their old loan, then I can't do reverse. Now, some people say, well, Ryan, that house is now $1,050,000 or $1.1 million. I'd say you're right. But if you still take that percentage and multiply it by the higher value home, you're still going to end up with something maybe $480,000, $490,000. It's still less than the $559,000 considerably. So it still is an issue of declining loan amounts due to higher interest rates. And a lot of people owe more than what we can lend them to pay off their old loan. So I can't get a reverse for them. Okay, so that's status of the reverse mortgage industry, by the way. We're still doing loans. You just have to have the right amount of equity to be able to access that. Okay, and so that's why I talk to more people than I have, saying, I can't do a loan. Sorry, let's figure out something else. So I run across these homeowners all the time, y'all. They call in off of commercials we're running. You have given them my name to call to ask them if they can get a loan. Just they're out there, right? And so you want to find these people. So do I. Why? Because number one, they need something. If we have a homeowner who is in a cash crunch, a lot of them are, and we know that the average age of a home seller is 63, we want to find people that might need to use our services. So how do we find them? Well, we're going to give you logins and some materials later on in class that will help train the people you know. I hate the word sphere, by the way. The fact that I still have it in this presentation is because that's all we hear nowadays is sphere. But really, I mean, authentically, the people that know you and your past clients need to know when they should give someone your number. We need to train them to know when somebody needs your help and they're like, hey, call my friend. Or they don't say, call my friend. They tell you, hey, I was talking to this person and they might need some help. So we need to train the people that we know to bring us these homeowners. Also, we could use the software. Remember those external awareness situations where we could just go out and try to find somebody? We can use that as well. So we need to be able to find homeowners that need our help. And we'll talk more about that coming up later on. So that way we can either be the recipient of the listing or, I don't know, they're buying a different home, etc. We need to know who they are. We need to know where they are. And you need to know what questions to ask them because sometimes it's a little elusive. I'll give you an example. A lot of realtors think that if somebody has a reverse mortgage, that they're not going to sell their home. They're going to stay in there until they pass away. And I can tell you that is a lot of times not the case. So why would somebody that has a reverse mortgage home want you to sell it for them while they're still healthy and doing stuff? We're going to find that out soon. Just got to know what questions to ask them, right? Okay, let's do a little reverse mortgage refresher. Reverse mortgage, a lot like a regular loan, y'all. Hopefully you know this by now. If not, you can take some of my other classes I do. Big difference. A regular loan, you borrowed money, you get a statement. A regular loan will show you how much you owe and what payment you need to make this month. And if you don't make that payment, you got to pay them twice as much next month, right? Because you're behind. A regular loan just is a lien on title, and you pay it off a little bit every month over 30 years. A reverse mortgage, on the other hand, is like a loan in that we just put a lien on your title. We want to get paid back like a regular loan. When you get your statement, it shows how much you owe. It shows what the interest cost is for the month. Here's the difference. With a reverse mortgage, if you say, I'm not going to send in that interest this month, what will happen to me? Well, if it was a regular loan, you'd have to pay twice as much next month. With a reverse mortgage, if you say, I'm not going to send in any payments this month, we just simply add the interest onto what you already owe, and your balance goes up next month. We don't really tell clients what to do. We just provide them a method to decide, do I want to pay a payment this month or just add it to what I owe? When do I have to pay that back? In the future. In the future. If you get a reverse mortgage and you just don't make any payments, you can do that really until you're about 150 years old is really what the cutoff is. And so obviously it's for your lifetime. So if you get that reverse mortgage, you get a statement every month. It shows how much you borrowed. It shows what the interest is for the month. It just says, you don't have to pay us this month. If you don't, we don't care. We'll just increase your balance. And you'll pay us more later. Where a regular loan, you pay every month a little bit. Reverse mortgage, you're going to pay us back more later on. That could be when you pass away, when you hit 150 years old, right? Your kids inherit the house, they pay us back, etc. Here's a big reason why people do our loans. It's not because people are like clamoring to do reverse mortgages. Believe me, I've been doing these things for like 18 years. It's because a lot of times they're like, hey, Ryan, I can't qualify for a regular loan, or the payment on that regular loan is just going to be too darn much. So it's not that I want a reverse mortgage, but maybe I can only get a reverse mortgage because the other loans don't qualify for me, or they're just too much money to pay. And so that's where we fill a big part of the role in the lending industry. We can still get people who are retired, who may not have that much income, loans to buy homes and refinance. We can get people loans who say, Ryan, a regular loan, the payment is just going to be too high. Can I get your loan and pay a little bit every month? Sure. You can decide how you want to run the loan. Just know that we're going to be able to get you the loan when a lot of times regular financing would be like, no way we're going to lend you money. You don't make enough. Your credit score is too low. You have issues. And so we can certainly help out in that department. And that's why a lot of people get reverse mortgages. Some people that didn't want one to begin with are like, yeah, Ryan, I'm going to do your loan. Wasn't really excited about doing it, but it's the only thing I can get. And I'm like, okay, let's do it. I don't know why. You should not worry too much about it, because the only difference between a reverse and a regular loan basically is if you don't make a payment, the balance goes up. So if you're going to make a payment, you basically got to know like a regular loan almost. All right. So yes, this is what's happening in my world. Going to see lots of clients all the time. A lot of them are calling me out because they're like, I never want to leave my house. Okay. And a lot of clients I'm saying, you might have to leave your house. Like, right? What a great industry I'm in. But that's the facts, right? Interest rates are higher. It's making financing less palatable, harder to do. So I let people know, look, you might not be able to keep your home, but you can still own a home. We just got to get you to a lower priced home and do a reverse purchase. So my inquiries and the amount of reverse purchases I'm working on at all times high right now, all time highs, because that's how we need to help people be able to afford to be in homes. One last thing on the refinance for reverse mortgage, in case you're wondering. So when somebody calls me and says, Ryan, I want to do a reverse, I say how old you are. Remember, the older you are, the more money you get. The younger you are, the less money you get. So I got to know age. I got to know interest rates. Higher interest rates are, the less money you get. The lower they are, the more money you get. And then I've got to know the value of your home. That's the formula for every single reverse mortgage out there. Age, value, interest rates. So a client says, I'm 75. I'm like, okay, that's all right. I would prefer you be 93. Okay, why? Well, on a government-insured reverse mortgage, 93 is about the highest amount of cash you can get. So that's why I say that, kind of joking around. But 75 years old, okay. Interest rates are 6.5%. Remember, I pulled my chart out, 6.5%, 75 years old. Okay, I'm going to give you, say, 44% of the value of your home. Okay, my house worth $1 million. Okay, I'm going to lend you $440,000. Okay. Let's see. Do you have a loan in your house right now? Yeah, I owe $200,000. Okay. You owe $200. I'll get you $440. You're going to have $220,000 left after I pay off your current loan. Got to clear that title off. What do you want to do with your $220? I think, Ryan, I'll take 100 and leave 120 behind. Can I do that? Sure. You can do whatever you want. You can say, just give me it monthly. You can say, keep it there. I'll get it later. So you have lots of chances to decide what you want to do with the cash out on a reverse mortgage. But that basically is the gist of the refinance. I'm going to give you a loan based on the value of your home, interest rates, and your age. You'd like to be older when you get a reverse mortgage. You'd like to have lower interest rates and a more expensive home. That's the trifecta, if you will, for getting a higher reverse mortgage. Once I tell you how much you qualify for, you know I got to pay off that first loan, and you know the rest is cash. You can decide how you want to receive it. And then you get your statement every month. It shows how much you owe. If you decide not to make a payment, let's say you borrowed $400,000. Interest was $3,000 for the month, let's say. You know, if you don't send that in next month, I will say you owe me $403,000. You send in $3,000, I'll say you don't have a reverse mortgage. If you send in $4,000, I say you just made yourself a regular loan because you paid in more than what the interest was. That's how our loan works. Over on the other side of the statement, it'll show how much you have left you could pull out. If you didn't pull out that $220,000 you have left, $220,000 is available over here. And that will just keep on going on for the rest of your life. All right, let's keep on rolling. But what happens to the larger percentage of the people who I say a loan is not going to work to help you get cash out of your house? How do we make this thing work? So, first thing we do after we've established that a regular loan or reverse mortgage might not work for them and a purchase loan is going to work. Again, we ask the same questions. How old are you? How much is the purchase price going to be on the house you want to buy? Right? And what are interest rates? So I did have a question pop in. I'll answer that real quick. The minimum amount of equity you need to qualify is based on age. So the younger you are, the more equity you need. I'll kind of give you an example. If you're 62 years old, you might need to have maybe 65% equity in your home. If you're 93 years old, you need to have maybe only 30% equity. So there's the guidelines, so to speak. But it changes, remember, because it changes based on interest rates. So you really got to let me know what age specifically, and then I'll help you figure out how much you can borrow or what the minimum equity is you need. All right, and you can do loans on mobile homes. They have to be on a permanent foundation. They got to be built after 1976, have a HUD tag, and most likely fee simple is the easiest way to go, which means you own the property. The other ways get more difficult. All right, how to get those questions answered. All right, so let's talk about the reverse purchase now. So we have a client who said, okay, I raised my hand. I do need to sell. So you sell their house. Remember their house is worth $950 in the example previously? And we say, okay, your house is worth $950. You sold it for $950. You had a loan on it. You had to pay that old loan off, whatever it was. So you net $470. That's how much cash you have in your pocket to spend on your next house. And you say, look, number one, I can't spend all $470. Got to keep some of that in my pocket. Otherwise, I'd be in the same situation I am now. Okay. Noted. You need cash in the bank. Second thing, Ryan, are you going to help me try to qualify for a loan that I couldn't qualify before? Or are you going to help me get a loan at 6 or 7%? That's not helpful. I say, yeah, because that payment would be kind of high. That'd be kind of a bummer. I say, third, Ryan, I don't even qualify on Social Security. And I'm like, oh, yeah. Well, you're throwing the book at me today. Of course, we're going to go reverse purchase. Let's say this client finds a home for $600,000. Now, you all being from North San Diego or San Diego area, this should be textbook for you all, because this is what I'm helping a lot of people do. Move from San Diego, expensive areas, LA County, Orange County, where they're selling houses for $950 million all day long, and they're buying where? They're buying Temecula, Menifee, all these places where you can find a home all day long for $600,000. So I would say, as a matter of fact, if you were to ask me, Ryan, give me the closest mileage that you see where you can sell a very expensive home and get a good priced home, and I have to drive the shortest distance to do that, I would probably say it's Orange County or San Diego to Riverside, right around there. It works great. It still is working great. So you guys are all in a, I'd say, in a very special area where you can find people who are tight on cash that have mortgages on homes they can't refinance and go, look, you only got to drive about 25 or 30 minutes up the road, and we're going to put some cash in the bank and get you another home. Sorry for that advertisement for Riverside County. Let's keep on trucking down the loan. So somebody says, okay, Ryan, I did find a home I like for $600,000. I'm 75 years old. How much do I got to put down? I'd say, well, rates are 6.5%. You got to put down $340. But you have $470, so you got plenty for the down payment. I'm going to give you a loan for $260. So now you can buy your $600,000 home and keep $130,000 in the bank. So we went from a situation where they could not refinance their current home, they couldn't get cash out, they had a higher mortgage payment, to now they have a house, cash in the bank, and we also just took them from a loan where they had to make a payment to a loan if they say, I'm going to skip a few payments. We're like, we don't care. You decide how much you want to pay every month on our loan. If you want to skip the rest of your life, cool. Your balance is going to go up every month. If you want to skip 6 months every year, your balance will go up 6 years. The other 6 months, the other 6 months, it'll be different. So it's really quite a difference maker. And I've been doing quite a few loans, like in Menifee area, the desert, where we just see some real big transitions. people moving into houses nice houses, $400,000. They've sold houses a lot more. They're putting a ton of cash away in the bank. They're buying these houses. A lot of times these houses are in better shape than the one they left behind because they're buying a house that someone's kind of fixed up to sell. So there's just so much that happens on a reverse purchase loan that I like, that it's fun. It really is. Do I do refinance reverse mortgages? Of course I do. But do I think purchases are funner? I do. Is it more work? It is. But do I see a bigger difference in people? I do. Because a refinance, someone's staying in their house, they're getting some cash, they're doing a little bit of work. When we find somebody who can't get money out of their house and they're like, man, I'm really worried here. Where am I going to live? My house is deteriorating. I don't got much money. And then we show them a way to get to a house that might be fixed up. You put cash in their bank and you get rid of a mortgage payment. You do all at the same time. That's pretty cool. Getting another question here on a mobile home. So yeah, you can do reverse mortgages on mobile homes. Y'all, I got to know the particulars on it because most important thing, what makes it easier to do mobile homes is when you own the land. When it's on leased land or you're making a rent payment to the park, those ones are a lot tougher to get done. But if you live in a park, you own the land. The mobile home was built after 76. It's got a HUD tag, in other words, and it's got its 433A. Then you can do loans on mobile homes. You can do that. You can buy a mobile home. I've done reverse purchase loans on a few mobile homes that worked out really well because that was a big game changer, right? Someone moved from a house where they had a super high mortgage payment. They're really concerned. They went to a mobile home, which was a very reasonable price thing, like out in the desert, like Desert on the Greens. Nice mobile home out there for $260,000. They put a ton of money in the bank. It just works out well. So mobile homes, yes. So I have to do some investigation on where it's at, what park it's in, etc. And if you run across those, send me some information. You'll have my contact information later, and I'll see if I can't get those, help you out with those. All right. Let's keep on going. Let's keep on going with my purchase loan, right? Because I love this thing. So what we did is we took a homeowner, like I said, from a situation where they had a house, they had a payment. They're like, if I were to refinance, I'm going to be still in a house with a high payment. I'm not going to work, right? How about a reverse? I'm like, I can only lend you this, maybe not enough that you want it. And they're like, what are my other options? Here's your reverse purchase. And they're like, hey, maybe I didn't want to think about moving. I was worried about what I was going to be able to buy. I was going to have to go out of state. I was going to have to go someplace too far. And now you're giving me an option where I can still stay somewhere down here in Southern California. I can still get a nice house. I can put some money in the bank. I didn't really think that this option was going to be available. Let's roll. And so they work. And, like you guys have lots of clients, so you can think about like stories and sometimes how their perception changed after they'd done whatever they did. And I had one lady who lived really nice area out in Sherman Oaks, right? It's it was a very high, that's a very expensive area over there. And she had a very nice house, but her husband got sick, et cetera, et cetera. And she's like, Ryan, I got to move. She's like, where can you get me a loan for? I was like, well, I can get you a loan, and maybe you should think about coming out to Temecula. And she's like, I don't want to go out there. Da, da, da. And I was like, why? It's nice. Like, what's the problem here? So she ends up finding a house, and she finds it out in the area on a golf course, right? And she just kept on telling me this. She kept saying, Ryan, what I'm going to do is just stay at this house for a couple of years, get everything organized, get my all my stuff that I need to do, and then we'll look about moving somewhere else. And this was 7 or 8 years ago, maybe 9 years ago. Now when I call her up, she's like, why would I want to move? And I'm like, because she was so dead against moving from Sherman Oaks to Riverside. Anyways, you guys have all those kinds of stories, but I get them all the time with people that are afraid of moving somewhere that they're unfamiliar with until they do. And then they're like, hey, this has actually worked out really well. All right. So we're going to get to how to find these people in a second. Sorry, let me just run through this real quick because sometimes we get questions on what happens to somebody when they have a reverse mortgage and they pass away. Well, basically, y'all, the kids can get the house. Okay. We don't own the house. We're just saying, hey, when parents pass away, get a hold of us. If the house has equity, whatever, what do you want to do? If you're staying in the house, you just got to refinance and pay us off. If you're selling the house, just pay us off when you sell the house. We're just a loan on title. That's it. Nothing special about that. Just a loan on title. What if the house is upside down? If we're talking about what's called a government insured reverse mortgage, which is a home equity conversion mortgage, that's the government insured version of reverse. Hey, if the house is even upside down in that situation, FHA is going to write down or basically pay the lender so the house is not upside down anymore for the heirs. Like in this case, their parents owed $750, the house was $700. FHA paid that loan down to $665. So, in other words, the heirs can still inherit these homes. They can inherit them with equity, and there you go. So I think there should be less fear about not getting the house or getting an upside down home because those solutions are already there. Hey, and the kids can get up to a year to do it, but I can tell you what. They don't get it automatically, and they find a way to mess it up. So I want to talk about another slide coming up, how you can try to intercept some of that business and be the listing agent for those heirs and help them solve the problem of how do I deal with the servicer? Because I'm getting these calls a lot, and I want you to be in there to be the agent to help them figure it out. So we'll talk about that coming up. All right, so that's what happens in the future reverse mortgage. Kids, you can inherit the home. You can keep it. You can sell it. It's your house. We just need to be paid off. If somebody wants to do a reverse purchase loan, or I guess a reverse mortgage for that matter, remember, we need to know how old they are, right? And we have our app that is being updated. If you have our old app, it still works. I think you can still download it in the Android store or the Play Store. I don't know if you can download it in the Apple Store, but if you have it on your phone, it should still work. But the idea is that every age is a different loan amount, so you got to get a hold of us. If you're married to someone that's under 62, you can still do an FHA insured reverse mortgage. We just have to have one person over 62, and you got to be married. If you're not both over 62 and you're not married to one another, then only the person that's 62 or older could be on the loan. So unmarried people, you both got to be 62. FHA, as soon as the house is worth more than about 1.2 million, FHA doesn't give bigger loan amounts out. So usually when a house is worth like maybe 1.2 to 1.3 or more, we're going to look at what they call a non-FHA reverse mortgage because we can usually get more money for a client. And so people will say, okay, Ryan, what's the difference between the two? Well, an FHA insured reverse mortgage has mortgage insurance. So you have upfront mortgage insurance that makes an FHA loan expensive, right? It's 2% of the value on an FHA insured reverse. So like if you have an $800,000 home, you have 2% upfront mortgage insurance that the government adds to your loan amount. So, and then you have a 0.5% annual mortgage insurance. So that's FHA reverse mortgage. Non-FHA loans don't have mortgage insurance. So you think, I'm just going to do that one right out of the gate, Ryan. Well, it's not FHA, which means the rates are going to be quite a bit higher. So yeah, there's a mix, right? One's going to be good for one, one's going to be good for the other. It just depends on the situation. Those non-FHA loans, right? We can use a higher value than FHA will. So people can get more money sometimes on non-FHA loans. And we only have to have somebody 55 years or older to do a non-FHA reverse. So it's interesting. I got a lot of people that are like still young, right? 55 years old. Man, come on. I'm almost 55. I don't think of myself as being old. So a lot of 55-year-olds are still like in their prime working. But some of them are finding maybe that they want to do reverse, not because they don't want to make payments. Maybe they're in an industry where they get like contracts or jobs and they'll have like, sometimes they don't work for 6 months and then they work for 6 months. So sometimes people are taking these loans now and making payments or paying down their balance when they have the money coming in. And then in the middle, they're letting the reverse mortgage not make a payment. So, there's lots of different things you can do with these loans nowadays, I suppose. Or even have a reverse mortgage coming out that guarantees the heirs a certain amount of equity, right? That's crazy. I just got a word that we're going to have a loan coming out like that. So, yeah, right? Different things with different reverse mortgage nowadays. It's not like back in the day when we just had, one. We have lots of stuff to look at. Anyways, okay, we'll keep moving on. Let's talk about marketing. Let's talk about finding people that might need our services to sell a home or what's going on with our older homeowners. Remember, that's hopefully why you guys showed up today. So I talk about the average age of a home seller, 63 years old. We want those people. You want those people. I want to do reverse purchase loans for them. You want to sell their home. We know they're out there. What we need to do, number one, is we need to find the external awareness and the internal awareness, right? Hey, external awareness. That would be like, and I do this sometimes, by the way. We'll give you logins to our videos and our marketing materials and our software that I use. Because there'll be mornings when I just hop out of bed and I'm like, I'm going to see if I can turn something from nothing today. Let me just see if I can find a piece of business from nowhere. Okay, well, that sounds like fun. Well, I'd log into Title Pro, which I'll give you logins for. I'd find, you can follow all this in my video. I'd find either a distressed homeowner, or I'd find a homeowner that has a reverse mortgage. I'd find a homeowner that's in tax default. I can use the external awareness to know that somebody might need my services. So you can do the same thing. And then we have letters inside of our system that are written for you. You can just drop on their doorstep or knock on the door and hand it to them, or just, in other words, we want to try to have a way to have some fun and get business, maybe out of nothing. And so we have logins for software, and we have letters in our system that you could use to follow along and have some fun and see what you can turn up. Now, the other way, of course, to get business on the internal awareness is where somebody knows somebody, or they've had a conversation with somebody, or it's their neighbor that they're looking at their house is in bad shape, and they kind of know their neighbor's having a hard time. Do you want that person, right? So we need to train our friends, our former clients, everybody to send us people. So one of the ways you can do this is with this newsletter. These are the ones at the top. These newsletters talk about problems that our retired homeowners are having. And so sure, you can give it to an older homeowner because it talks about, what do I do with capital gains? How does Prop 19 work? How can I get financing to buy a home when I can't get a refinance? Should I sell my home to an all-cash buyer? Like, we just have articles in here. Should I get a hero loan? Be careful, right? So some people should sell their homes before they get hero financing because they can't afford the payments and they just don't know it yet, right? Anyways, these newsletters are designed to try to get an older homeowner to talk to you. But also they're designed to send to your sphere. You can download these off my site, put your name on them, email them to everybody you know, and keep it in front of them. They need to know that when they're talking to an older homeowner says something, you've trained their brain to be like, I need to get them to call Rebecca because this is Rebecca keeps sending me the newsletters on. I need them to call. I got to give this person to Jose. We got to train the people that we know to send us people. And so we try to put these materials out there so you can just email it to them. By the way, people with reverse mortgages are your clients. Why? Because there's an average length of time a reverse mortgage is held, right? And it's around that 8-year mark. Why does somebody get rid of a house that has a reverse mortgage on it, maybe around the 8-year mark? Why is that an average? Well, a couple reasons. Number one, we used to be able to refinance reverse mortgages when rates are lower to get cash out. And so people are doing it all the time. Now they want to refinance to get cash out and get a new reverse mortgage. And guess what I tell them? Rates are too high. And they're like, but Ryan, I got all this equity. I'm like, you don't have a mortgage payment. Isn't that good enough? They're like, no, I need more money. I'm like, well, you can downsize. And they're like, well, you mean I can sell my house the reverse and get a new reverse? I'm like, yes. And so people are doing that. So you have to act. If you can use the software to find reverse mortgage people, or when you find out someone has a reverse mortgage, you got to say, how's that going for you? You get all the money you need? A lot of them are going to be like, no, I need more money. And you say, oh, well, you know what? There's reverse purchase, right? They're going to be like, what? Well, yeah, we'll get you to a little lower price home, maybe up the street over there in Temecula, and put money in the bank and get you a new reverse. Why else is someone getting rid of a house after 8 years reverse mortgage? Because our boomers, biggest demographic, right? A lot of them are starting to get to the age where they're having a hard time, well, basically living alone. And so I'm getting more calls from you as realtors going, Ryan, I found somebody that got a reverse mortgage and they got to sell their home. And of course, I still ask why. Well, because their kids want to bring them home, or they decided they want to go to a place where they can get care, maybe a senior community. But it doesn't matter, Ryan. The point is that they can't stay by themselves in their house anymore, even though they have a reverse mortgage. So we got to know, our older boomers and maybe our younger silent generation are finding after 8 years of having the reverse that maybe they need to do something different. Yeah. So what other reasons, right, are there? So you need cash. you need some help taking care of yourself, and then people pass away sometimes. That the older people that got reverse mortgages, maybe they got in their 80s, mid 80s, and they've had a reverse mortgage for 8 years, and now they're 90s and they're passing away. So these are all reasons why we need to check in with people that have reverse mortgages. They are selling sometimes before they pass away, or you need to know that maybe they're not doing well, and you need to help be aware of who they are, who their heirs are, and you're saying, man, this person doesn't look like they're doing well, okay? Because something might happen to them and you need to sell their home. So I know that agents in the past said, Ryan, why would I care about someone that has a reverse mortgage? They're not going to sell their home. I'm like, quite the contrary. They do. And a lot of times it's because they need money. A lot of times, right, it is because they need money or because they can't help themselves anymore. So use the software or pay attention to that part. Use our newsletters to get your sphere to send you an older homeowner that says, I'm having a problem with something, or I'm thinking about doing a hero loan, or I don't know. I got somebody want to offer me all cash in my house. Train your sphere to know their neighbors are not doing well and get them to let you know who that person is. Maybe do all your friends and your relatives in your sphere, do they know that the average age of a person right now selling a home is 63 years old? Probably not. By the way, here's something else. Last time I checked, about half the reverse mortgages do not have title set up properly for their heirs to inherit the home easily. Yeah. Sometimes even though the house is in a trust, that doesn't mean the reverse mortgage company is going to be easy to work with those heirs. I get a lot of people calling going, Ryan, the reverse mortgage company won't talk to me. Why? I get calls from attorneys going, Ryan, we're having a problem with this reverse mortgage servicing company. Why? And I can trace it all down to when they did the reverse mortgage. Did they have a trust? Did they not have a trust? I can trace it down to did they change title after they had the reverse mortgage? I can chase down a lot of problems just by simply looking at title. And then there is ways to fix that. There's ways to get the servicing company to speak to the heir. But a lot of times the heirs immediately get frustrated and they think the reverse mortgage company wants the house. That is not the case. We have to be careful who we talk to when someone's passed away. And so anyways, I can help you find those people because you want to give them a letter. I think one of the letters on the screen here says, your heirs need help inheriting your reverse mortgage home. So you can find those people and give them this. So anyways, listen, there's ways to turn over business. Now, is this stuff just like boom? No, of course not. Unfortunately, everything is real work. But if you can carve a little bit of time out of your schedule and you just want to have some fun, we do have some resources to try to pick up a reverse. So yes, that's what we want you guys to do. We give you logins for this software. This software can be used to find people that have tax defaults, in default, people that have reverse mortgages, people that have reverse mortgages that don't have it in a trust, people that had reverse mortgage for 8 years or more. That'd be someone you might need to talk to. So all kinds of things in the software you can use to tweak it. I tweak it for people right in my area. I don't try to make some kind of big marketing plan, say, okay, I'm gonna use this software and go out 5 square miles. No, I'm never gonna do that. But will I keep track of my immediate neighborhood and maybe between here and the office, places I know that I can stop by very easily, so that if I get a hit on some of the things I show you on the videos, I can hit that door a few times with the flyer or me in person because I know something is happening there. Now I just need to insert myself. And of course, we want to help you do that. But this is software that will help too, right? I always try to insert myself into households that are near me that I see a problem developing because something's going to happen there, right? It's just like when back in the foreclosure days, right? 2006, 7, 8, what was it? 8, 9, I guess. Geez, hold on. The days are all not 2010, right? Those types of times we started having 2008, 2009, we started getting into the foreclosure period, right? And it was like you could pull all the people in foreclosure. And although you didn't know exactly what was going on, you had a pretty good idea something was going to happen. So you just had to be there when that thing was happening to try to get yourself in there. And that's the same thing nowadays. We're just looking for different clues. And the clues nowadays are more about older homeowners and inserting yourself. On our website, I have refresher courses on all the stuff we've talked about. But, I just want to make sure you guys are all thinking about this, okay? We have average age of home seller, 63 years old. We know they're selling their homes. We need to insert ourselves. We need to listen for them. Maybe you all didn't know that when someone was talking about a reverse mortgage, you have to listen. Number one, because we're funding less people that need reverse mortgages, and they're going to be like, I thought I could get one. I guess I have to sell my house. Don't you want to be there for that? Well, when you hear someone talking about a reverse mortgage, insert yourself in that conversation. Did you know that people, average age of a home, someone with a reverse mortgage is selling after 8 years of having the reverse mortgage? Why? Because something is happening. You need to find those. How about the people that are asking what interest rates are? Why are they asking that question? Do they think they're going to lower their interest rate? No. I think every single homeowner in the entire world right now, I might be projecting a little bit, but basically we all know rates are higher. We're not lowering our interest rate. So if I'm asking how are interest rates, what am I basically saying? I'm probably saying I'm thinking about trying to get some cash out of the house. I'm trying to figure out what kind of loans are out there. You got to hook on to that. So, just from the normal conversations maybe you guys have been passing up on or not getting involved on, I want you to get involved in those because I want that to turn into some business for you all. Okay, let's see. Okay, yeah, if you guys, I can tell you, usually people that are taking a class out, agents, if you're probably a few conversations away at this point in time from being in front of an older homeowner that might need help. And I'm finding more agents in the class now that have had those conversations are like, now what do I do? So when you run across those people, or I can try to help, I can give you information to get yourself in those conversations. Yes, fire back at me, because that's what I'm trying to do is help you all with scenarios. Help you try to analyze something to see if it's going to be a transaction for you, even though the client doesn't know it yet. Isn't that the key? We realize a need that somebody has just because of what they're talking about, even though they think they're going to find a solution, and we know the solution doesn't exist anymore. Now it's just a matter of how you're going to bring them full circle, right? And so that's what we want. Of course, that's what we're here to help you all with. We want to do reverse purchase loans. We want to do reverse mortgages, but that really is just kind of a sidekick nowadays, because it's more now about knowing a lot about our retired and our older homeowners and being able to listen for the right cues and knowing how to help them properly. And then we get business from that. You end up getting a listing from that, but not because necessarily you went out thinking I'm going to get a listing. You went out listening for a problem that our older homeowner is having and then trying to help solve it for them. And we just know there's a pretty good percentage of that solution being involving what you do for a living. But ultimately, we're starting with just trying to get ourselves into those conversations and being someone that can provide information, right? So yes, when you run across a scenario, you run across an older homeowner, you're like, Ryan, I don't know what to do with this person, but they were just talking about getting a loan. That's all I know. Can you talk to them? Of course I'll talk to them. Let me see if I can identify what they're going to have to do. Ryan, I used that stupid software and I came up with some people that got reverse mortgages in my neighborhood. What should I do? Okay, well, this is probably what you should do. Use this flyer, go do this. Do this 5 times in a row. And they will eventually get a hold of you. So yeah. Okay. So if you're wondering, ultimately what we're trying to do is to help you get in front of people and find some business so you can sell a home. Eventually I can do a loan. All right. Let's see. Do we have any more questions that I could answer? I know a lot of times I do get agents that are like, Ryan, can we do prospecting classes and this and that? And I try to do videos to help you prospect. So that way you can watch it over and over again. I'm trying to do more of those videos for you all where I'm actually out trying to just turn something into nothing. I think that's really fun. And I'm sure you guys love that too. Don't get me wrong. I'm sure you guys we love referral business, right? But man, when you turn something from nothing, from dirt into something that, provided a living for you, hey, I love that kind of stuff. I think that's like the true essence, right? Of sometimes the business that we're in is taking just what we have up here, and what we got right here and turning it into something that pays the bills. And that's what I get jazzed about. So you can watch some of the stuff I do on our website to try to figure out how to get somebody interested in us. All right. So there we go. Do we have any other questions I can answer for you all? Obviously, we're right here in Irvine, so we're pretty local. We run between San Diego, basically the desert, Bakersfield, up to Ventura. That's our reach. That's where we can show up in person to help you out if you need that. So we try to stay mobile so we can get to where you guys are doing your business. Let's go to our last slide here, which probably has our phone numbers, et cetera, on it. Or did I already do that slide? Where am I at here? Did I jump off of that slide? I probably did. Okay, here we go. Let's get back over there. Uh-oh. There it is. Okay. So obviously these are our contacts. 888 number. You can call that 7 days a week. We will usually answer the phone. Somebody will 7 days a week for you. 714, that's my cell phone number. Text is probably the best way to get me to respond because sometimes, you know your cell phones are nowadays, right? I never know what is calling me. So I usually try to like a short text. Hey, Ryan, I took a class. I got a question because boom, I'll hit you with the call, right? If I don't hit you back with the call, you can email me or you can just go back to the 888 line and say, I got a question. Ryan isn't picking up. What's wrong with that guy? And we'll say, well, I can help you. Okay. So we definitely want to try to get you. I don't want you to have a client that might be a deal right in front of you and you just are like stymied a little bit by what to say or what question to ask and not recognize that's a deal. So that's why I want you to be able to call us right away so we can try to get you answers to that question. In the meantime, get out there and spend some time with some people, I would say in their late 50s and older, because they need our help. They like people. They like talking to you, and there's some business there. Thank you so much for joining us. You're going to get an email with our contact information. You're going to get an email with your logins to the websites. You're going to get your emails to basically help move forward and see if you can stay alive at 25.